Now let's move on with a look at the day's top business stories with our business editor, Marcus Carlson. Hi there, Marcus.
Hi there, Catherine.
And we're starting off with a company that we've talked about such a lot in recent weeks and months, Volkswagen. Their legal woes seem to be getting worse in the wake of the diesel emissions scandal.
Indeed, Volkswagen hitting the headlines once again for all of the wrong reasons. This as they're facing fresh legal troubles, as you say, Catherine, in both France as well as in Germany. French prosecutors, for instance, have opened a serious fraud investigation into Volkswagen over its rigging of cars to cheat on emission tests. It's a continuation of a preliminary probe that was opened back in October. At the same time, German prosecutors have confirmed that the number of individuals in a fraud probe there has gone from 6 to 17. These legal woes hung over a meeting of VW's management and workers this Tuesday like a dark cloud. Delana de Souza has more.
Nearly 6 months since news of Volkswagen's emissions cheating scandal broke, the company's top management sat down with 20,000 workers at its German headquarters. They warned that depending on how much the carmaker ends up paying in legal fines, layoffs could be on the cards. Chief Executive Matthias Müller said the scandal would inflict substantial and painful damage on Volkswagen, but it was the Works Council chairman whose message was directed to authorities in the United States.
Should the future viability of Volkswagen be endangered by an unprecedented financial penalty, this will have dramatic social consequences. We very much hope U.S. authorities also have an eye for this social and employment political dimension.
The U.S. Justice Department has sued Volkswagen for up to $48 billion for breaching environmental laws in the country. A report submitted to a German court this week reveals the carmaker was caught off guard when authorities in the United States went public with the cheating scandal. Volkswagen was hoping instead for an amicable settlement. Meanwhile, the number of employees currently under investigation in the scandal in Germany has widened to 17 from 6. So far, none are current or former members of the board.
Okay, let's move on now. Banks are likely to move parts of their businesses from London should Britain vote to leave the European Union. That's according to Britain's top finance official, the governor of the Bank of England. Mark Carney was speaking to British lawmakers on the impact of a Brexit on the financial industry in the UK. Carney says that the Bank of England won't come down on either side of the debate, but he acknowledged that financial services could leave London if there's no mutual recognition of rules.
A period of uncertainty. And I would say that a number of institutions are contingency planning for that possibility. Major institutions, foreign headquartered institutions who have their European headquarters here. So there would be an impact.
Okay, that was Mark Carney speaking there a little earlier. Now, there are fresh fears that China's economy is heading for a slowdown. It follows a steep drop of Chinese exports during the month of February. Figures show they fell by 25% in comparison to the same month last year. It highlights that the world's appetite for Chinese goods is weakening, and that in turn could have consequences for China and its economic growth. And those Chinese trade figures have put a dampener on trading across the globe this Tuesday. Shares in the United States are trading to the downside still after opening in negative territory as well. The S&P 500 leading the way down, as you can see right there, by around about 0.5%. Energy shares are weighing on the indices as well after a drop in oil prices. In Europe earlier, the main stock markets closed in the red as well after the Chinese trading data. Mining shares were particularly hard hit on this side of the Atlantic on fears that China's appetite for minerals will fall back. And let's talk you through some other stories that we have been watching for you. And the German utility RWE is planning to cut around 2,400 jobs in Britain. The jobs would go as the German company is looking to restructure its UK unit, npower. RWE says npower lost 137 million euros last year compared to a profit of more than 200 million euros back in 2014. The German utility says there are no plans to sell off npower nonetheless. And shares in luxury goods group Burberry jumped on Tuesday, finishing nearly 7% higher in London. It came on fresh speculation that the British company could be facing a takeover offer. The Financial Times is reporting that Burberry has sought assistance to fend off a takeover bid. The company is trying to identify a mystery investor who has built up a stake of nearly 5%. And the Brazilian construction tycoon Marcelo Odebrecht has been sentenced to 19 years behind bars for corruption and money laundering. The court found that he had paid millions in bribes in exchange for contracts and influence. He was arrested last June in connection with a bribery scandal at the state-owned oil giant Petrobras. Odebrecht was the head of Brazil's biggest construction company, which bears his family name. And Porsche has joined watch brand Tag Heuer and sportswear maker Nike in cutting ties with tennis star Maria Sharapova. It follows her admission that she failed a drug test in connection with the Australian Open earlier this year. Porsche says it's suspending planned activities with Sharapova until more details are known. Maria Sharapova was the world's best paid female athlete last year, earning nearly $30 million, most of that through sponsorship deals. And on that sports note, we're going to finish up the business.
Indeed.